Now, finance has become one of the defining pressure points ahead of COP30, and particularly as the European Union and several developed country blocs continue to resist reopening the new collective quantified goal, that's the NCQG, that was agreed to at COP29. One of the most constructive pathways forward is shifting attention to the real enablers of progress. We're talking about credible investment plans, capacity building, and projects with clear, high-return climate impact. Absa says it's mobilising sustainable finance at scale through green bonds, sustainability-linked loans, and other innovative mechanisms to close Africa's climate investment gap and unlock new opportunities for growth. To discuss this further, we're joined on the line by Kenneth Milanzi, Head of Stakeholder Relations at the Absa Group. A very good afternoon to you, Mr. Milanzi. Good to have you with us.
Good afternoon, Thami, and thank you for having me.
So when we look at the continent of Africa, it contributes less than 4% of global emissions, but it bears some of the worst climate impacts. How should climate finance commitments be set up in order to reflect this disparity?
No, thank you for that question. And as you rightfully put, we are considered the least emitting, yet most impacted. So perhaps very timelessly speaking, just after COP30 and G20, finance has been a central pressure point, and progress hinges less on political negotiations and more on enabling credible investment plans, capacity building, and high impact climate projects. So as it stands, I need to preface this with a bit of context. You started off with the NCQG, and from there it did not materialize because it was meant to be done by 2025, and a new promise has been made. So maybe the questions that we should be looking at, rather than the different promises that are being made, which are progressive because we need to have a target, is to look at the portion of what makes something bankable. And just very briefly, bankability in simple terms is just a way of structuring our projects in such a way that it can give investors and lenders the confidence of predictable revenue streams and that the risks can be managed effectively. So perhaps the conversation around this should be more on what does bankability look like? And the second bit, maybe ahead of our discussion, looking at how multilateral development banks have played a role in using concessional financing and grant financing rather than us using the traditional debt instrument, because as it is, we service a lot of debt financing before even using the money itself for what it's intended for.
And with that in mind, let's perhaps look at the climate finance flows into Africa. How effective have they been so far? And where would you say they've fallen short? And perhaps while you're at that as well, how banks can bridge that climate finance gap and describing what that bankability, as you put it, looks like.
I think the data speaks for itself. In terms of climate flows, with less than a tenth of what is being put out gets to Africa. So we are less funded. So let's say for every 100 rand that's being, or for every $100 that's being financed, Africa as a continent is getting about $9. So we are the least emitting, yet most impacted, yet you find that financing is very little. And then maybe two parts, just to preface that with some context. The bulk of the financing comes from public sector. And when you and I say public sector in Africa, that's your tax money, you and I's tax money. Whereas in the global north, the bulk of the financing, which is 90%, comes from the private sector. So how we could build the gap, I guess, coming back to the bankability portion, is using new models such as that of de-risking the projects. And South Africa is a classic example, as it's recently had a deal with the World Bank called a credit risk guarantee vehicle, which will see more enablement. And I think if done correctly and successfully, which we'll pay attention to closely, this similar model can be replicated across the continent.
So let's wrap up.
So in summary...
Yes. In summary, please go ahead, sir.
So in summary, we need de-risking mechanisms combined with players such as multilaterals who can provide concessional and grant money, and also the debt issue, how we finance our debt as it is will not suffice and it's not sustainable. I think this has been belabored as a point through the G20 conversations, looking at the cost of capital for Africa being significantly high for what it truly is, through what is called the perception premium or prejudice premium. So I think where the banks can play a role, Africa as a continent is well able to capacitate domestic flows. And we are in that unique position that we understand our markets and we can drive solutions which are for Africans by Africans.
Well, thank you so much, Mr. Kenneth Milanzi, Head of Stakeholder Relations at the Absa Group, as we focus on post-COP30, as well as climate change and financing climate change and that big issue of bankability, as Mr. Milanzi has highlighted. Thank you for your time this afternoon, sir.
Thank you so much.
Thank you. That's Kenneth Milanzi, Head of Stakeholder Relations at the Absa Group.